I want to look at this day chart for APPY, uh, Aspen Biopharmaceutical, to illustrate, or to suggest rather suggest how a growth can be manipulated. All right, so you have manipulated momentum, which is just erratic. You don't have the information that the market maker has. Okay, so the opening is always going to be to the maker's design. Now here you have a 13,000, right, that is opening, um, maybe 7 or 8 cents higher than it closed. So that might be right there, $1,000 that the market maker makes. Now look if the market maker had bought around 13,000 shares at the close of October 15th. Now the rest, this is just normal. 5,000 is normal for this price. I think these are just people buying. Okay, I mean, there's a high one, but that's certainly normal. 600, that's normal. That's high, but that's normal. That's okay. Now, right here, all of a sudden it takes off. Why does it take off? What if they know that they have enough orders at this point that they can raise the price up? Okay, through market order and limit order and stop limit and that sort of thing. So what if they were to start buying around, at the bottom here, okay? And you can really see something happening right there. I mean, why 19,000 shares all at once? Okay. Now, you realize that if they buy there and they sell up here, they're still going to make a profit. I mean, if they buy there, which is at 290, and they sell right here, which is 304, it's 14 cents, and it's selling 250, let's just say 20,000, right? I mean, that's 2,480, something like that, that they're just pocketing, and this is barely 10.15. So, maybe they've already made a 4,000 today. Now, let's just suppose though that maybe they bought all this. Like if you buy right here, okay, so you have those stocks and you sell them, or you borrow and sell. Okay, so this is shorting. You can sell it down over here if you know it's going to fall for profit. Okay. Anyway, what I'm suggesting is that on the way up here, if you start tracking the sales right here, and you let it go and you stop right here and you put that sum on one side, and then you watch what happens down here, all the way to the lowest point of this. You see this growth right here, all the way to right here. You get about the same number of trades. I did. If you watch this number down here, I tracked that, and you get a rough equivalent. Now that 19,000 right there really helps, but then you got 15,000. See, then you got 22,000. I mean, someone is just buying this up, maybe to sell right here, maybe, or maybe they're borrowing it and selling it, because whenever time you sell, you have a figure that says sale, you have someone that bought it, right? So maybe they're getting their inventory high here, selling, so they have money to buy back the stock over here and return it to the person who lent them the stock. This is the short sale. They can make money going long by buying it right here and letting it rise and selling it right here, or they can make money by selling it right here and then borrowing stock, selling it right here, keeping the money, and selling it way over here, or selling it right here. And they'll pocket the difference, okay? Because they have to return the stock, they have to get it back, and that's the short sale. But what struck me is that the average number of sales here, not average, but the rough sum equaled the rough sum of sales here. And why this sudden explosion? I mean, we're talking about 265 to 304. I mean, what's that? 39 cents. Then a drop. Is this any sort of natural momentum? Now this appears to be such. Okay. Um, but then you have this sort of thing. You get about right here. You get 4,000. That's normal. 800 is normal. 1,000. Right here, 26. You see, I'm looking right here. And when you get right here, it's, what is it? 26,000. Why all of a sudden? I mean, the stock has been falling, okay? Why all of a sudden 26,000 sales? Well, what if they borrowed the stock and sold it right here because they had a lot of market orders, they had a lot of sell at this point orders, limit orders to sell. So they knew that there was going to be all this stock available at this price. So they 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 borrowed the stock, they sold it to those orders. So they have this cash of money, and because they know of the string of orders they have waiting ahead of them, maybe they realize we can arrange this so that now now look, 12,600. You see it on that side? 17,000. We're already at 29. What did they get up here? 26, 1,000, 26, and a 2,000 more. 27, 28, 29,000. And by this time right here, they've gotten rid of 29,000. Are they making money off the short? It seems like they might be, because this is an incredible drop. Now, what I want to know is, here is 26,200. What if they realize now at this point, because we know the orders that are ahead of us, you have a chain of orders, and so they know the orders for the next hour that they're going to try to fill. The computer's doing this. It's an algorithm. All right. What if the computer realizes, if I buy right now, I know that the orders will allow me to increase the price to fill these orders naturally. Okay. Now look what it's doing. All right. So that somewhere right around there, I get rid of half, and I make, I don't know, 15 cents profit on every share. There's only that's like $9,000 right there. Okay. No, excuse me. That's not 9,000. That's more like, if they make 15-cent profit and they sell, that's more like, I don't know, $1,800. But now they're selling big chunks, 6, 9, 420, for another 4,000. Okay, so there's 5, 100 they sell, 5, 980 they sell right there. Um, this doesn't seem like natural momentum growth. It seems like there somebody who knows the chain of orders, who knows what lies ahead for the next hour or two, that the orders that people have sent in, they know that they can legitimately rearrange the orders, manipulate it legally, so that they can orchestrate for themselves profit for selling long, perhaps, building it up, profit for selling short, all right, profit when they realize around right here that they can do this because of the orders they have. They buy, they buy, they buy, all right. excuse me, they borrow the stock and sell, borrow, sell, borrow, sell, so they have all this money right here, okay. So but they have to return the stock. So what they do is they wait till the price drops of the stock, buy it back at a lower price, keep the difference, and return the stock to the borrower. So this is shorting it. I think that this graph suggests, the movement of this graph suggests that might be happening.